Refinances. What is a refinance? Why should somebody do it? What are the types of refinances? Whoa, that's a lot of information. So I found that a lot of people go and buy a house and then they're told to refinance and they have no idea what it even means. And I think loan officers overlook that. So today's video is about refinances to educate you people that have bought a home recently. So a refinance is taking your old mortgage out and replacing it with a new one. That is what it is. You're taking one out, you're replacing it with a new one. How do they do it then? You get a new loan that pays off the old loan, may roll in closing costs, might be cash out. We'll go over the different types, but the process is that. Why would someone do that, Ed? Well, first of all, some do it just to lower their interest rate. Some do it to lower their interest rate and get rid of private mortgage insurance. Some do it because they have to. They're going through a divorce. They bought with a coworker, the coworker wants out. There are multiple reasons to refinance, but the actual act is taking one loan and replacing it with another. Ed, can you talk about the closing costs for a refinance? They're different from state to state, but they're a lot less than a purchase. Well, what? You don't have owner's title insurance. You don't have some other fees. What we try to do is I try to make sure there's a break-even analysis. What is that? I try to look at what is the cost of the closing cost, the real costs, lawyers, title insurance, appraisals. What is not real costs? That's prepaid items. Prepaid items are held in an escrow. So those are prepaid. Those are not costs. We'll go back to how those flow. But closing costs, let's just say the closing costs are $3,000. Not saying they are, I'm giving you an example. Well, if John's going to save $100 a month, that's 32 months. John has to see if that makes sense. John has to look at the market, his situation. Often over the last year, we've seen dips, but they're short-term dips. From 23 to 25, we've seen short-term dips a couple weeks. I mean, we've all seen the news. Rates have been as high as in the 8s, as low as in the 6s. So during those dips, we show somebody what their break-even is, what their savings is per month, and what their costs are. And then we show them maybe it's a 12-month recoup, maybe it's 8 months, maybe it's 20. What's the right number, Ed? It depends on the individual. Another reason to do refinances are people that maybe have been in their house for a long time. They're in a great rate, but they've run up credit cards. And when we average their rate, their great rate on their mortgage and all their credit cards, it's huge. It's 12%, even though they're 5% on their mortgage. Well, maybe combining it and getting something in the mid-6s or 7s makes better sense. We look at that for people. We'd also look at leaving the first mortgage and getting a second mortgage. But refinances have a place and a time. Not everybody should refinance. You should make sure you understand the numbers. The mortgage person should be understanding your emotional goals, your numbers goals. What I don't like to see personally, and I talked to my own son about this, I watched it over my career. Many mortgage people refinance people 6-7 times over 8 years. But they kept bringing them back to a 30-year fixed. You can reduce your term. Let's say you're 5 years into your mortgage, rate's going to be lower, but you don't want to go back to a 30. So you do a 25-year. Or if you do a 30, you take that savings and you show them how if they apply that savings back, they paid off in 23 years. But you want to be careful of not keep extending because then you never pay off your mortgage. So that's a lot of the pros and cons and what a refi is. Some of the stuff can be complicated. There's questions. Should I not? Does this make sense? Should my mother be doing this? Should they be refinancing because I'm concerned dad might get laid off? There's many reasons. I'm a phone call away. What are prepaids? Well, many people escrow for taxes and insurance. That is held in an escrow account. When you leave one servicer for another in a refinance, you have to set up your prepaids again, but you get your balance from the other lender back to you after closing. So again, they're not closing costs, they are cash flow. Ed, do I have to bring all the closing costs of prepaids to closing? It depends on the type of loan, depends on the equity you have in the loan. It's an individual situation. Ed, would you say majority of the clients you refinance roll their closing costs in? I would say yes, but not all. Some don't want to. Ed, do you always have to escrow taxes and insurance? Can you pay them on your own? You can under certain programs, usually if you have 20% in or more. I gotta be honest, most people are not committed enough to put the money away for the insurance and taxes. And then it becomes, oh God, I owe this. I always advise doing it. And I paid interest on an escrow account. Yeah, it's measly. It's not like putting it in an IRA or something or a savings bond, but that's how I would deal with it. I love what I do. Today I'm talking about refis and closing costs and prepaids. Every situation is different. Hopefully you found some education from this. Your individual situation is different than your uncle's, your friends, Johnny online. Just reach out to me, email, text, call. My information is below, and I love what I do. Bye-bye now.